Right. Good, good, good. We're up and we're running. I was talking away for quite a while there and I realized that the mics weren't working. Yeah. So I was just saying that I see that in the invitations that went out, it did say Monday. I think we did switch things around a little bit last week. But yes, today is the day. We might be a few people short, but we'll continue with what we need to do. Now, last week, I did send out in the chat. If you are in the chat, you would have seen a trading plan, how we go about looking at things in the market. If you've seen that trading plan, just drop a 1 in the chat. If you've seen that trading plan, just drop a 1 in the chat. If you didn't see it, I could repost. Awesome. Awesome, awesome, awesome. Right? This is just to give us some guidance because sometimes we know what to do and then we just kind of drift off into our own thoughts and our own feelings. So the trading plan is definitely there to help us and establish a systematic approach, a structured approach to trading and executing. Now, as you know, one of the things that is very important to us is making sure that we understand the fundamentals and seeing what is coming up, getting a fundamental and sentimental bias for the currency that we're looking at, and then applying that to a currency pair, right? So let's have a look and see what happened last week. And you'll see why this is important. Let's see what happened last week, and then we'll look ahead to see what is coming up and how things could potentially shake up. Now, let me share my screen. This one, okay. Okay, so this was last week's high impact news. Now, we always generally look at the high impact news, not the medium or the low impact. Right, we're looking at high impact news because these are the things that really drive the market. Now look at this here. We had a speech from the governor of the Bank of England on Monday, right? But then Tuesday, we had a lot of news from the GBP from the US. Now look at this. GBP came out with some negative news, right? This is Tuesday, and then on Tuesday afternoon, the US came out with some negative news. Now, if you were looking at the GBP USD on Tuesday with negative news for the US and negative news for the pound, right? How do you think that would have affected the GBP USD pair? That is a question. How do you think that would have affected the GBP USD pair with negative news for the GBP and negative news for the US?
Probably not much movement.
Okay, yeah, excellent. That's it. So let's actually look and see what happened, right? On GBP USD for Tuesday. All right, so this is, let me just remove that. So this is Tuesday right here, as you can see. Let me just remove these boxes, clear things up a little bit. All right, so this is Tuesday. And as you rightly said, probably not much movement. This was the whole of Tuesday right here. Just pure consolidation, pure consolidation. But eventually, we actually started to see it drop off a bit, right? Because the previously, if you were on the session on Monday, we were looking at negativity on uh, on the pound, right? The pound generally had a lot of negative news. I think it was inflation that wasn't great, but we saw that price was consolidating and it dropped off. It broke below our mood swing level, and then we started seeing some movement to the downside. But eventually on Wednesday in the afternoon, we started seeing positivity coming back into the US news. Now, I mean, that was quite a remarkable figure right here. This 800,000 houses. And this housing figure is a very important figure because it shows how much mortgages are being distributed for people to purchase houses, right? People don't really purchase houses with cash, at least not most people anyways. So it shows that the banks are lending money, and is giving a little bit of a boost to the economy. For 800,000 houses to have been purchased when the expectation was only 650,000. Okay, so that was a big boost there for the US. And then well we saw the fall off. Sorry, on Wednesday, and it was late news, right? See a little bit of a pullback, but then on Thursday, that kind of just continued on. And then where there was the GDP news, GDP shows that there was positivity in the growth of the US as well. So all of these things were just positive for the US. And as such, we saw on Thursday, the US really strengthening. So things like AUD, USD, GBP, USD, NZD, USD would have fallen out of the sky. Whereas gold has had its mind of its own. Now, gold did have a little bit of a pullback on Wednesday, Thursday, I think, and then eventually a push up on Friday. We'll look at that. We'll look at that eventually. But yeah, we could see how all of these news events really impacted on the charts of the US pairs, where the US is the quote currency, right? The second currency. Now, if we look at, say, for example, a USD CAD, that would have been pushing up because the US is the base currency. So let's look at that. Yeah, you see that? So the US would have been pushing up on the USD CAD. Right? And of course, when we do get ourselves a fundamental bias, right? You see price comes back, it taps on mood swing level there, continues pushing up. It didn't make it all the way back on Tuesday. Wednesday had a little bit of a tap here and then continued pushing up. And then the trend was very strong. It really didn't pull all the way back. But as I was saying previously, once you get yourself a fundamental bias, you could switch on the bulls, right? In this case, right? You could go down to a 15-minute time frame, and that would have been able to give you some entries for buying opportunities, even though we didn't get a full pullback to the mood swing level. Okay. And this is something that we discussed last week, right? So you could start incorporating that into our playbook. Excuse me. Now, let's see what's coming up. So at the moment, right, the sentiment for the US is still strong US. Although we had a little bit of a negative negative news right here. Well, it was neutral, to be fair, right? It wasn't that negative. It was neutral. It came in as expected. However, I guess the market saw it as a negative because there had been so much interest rate cuts and everything that has been trying to pull this what we call the inflation under control. Now, this here is just another inflation guide as well. So if I click on it, we'll have a read. It says here, the core personal consumption expenditure, PCE, price index measures the change of price of goods and services purchased by customers for the purpose of consuming, including food and energy. Unlike a fixed weight CPI, the PCE is a chained weight and thus adjusts to changes in consumers' behavior. Core CPE is the Fed's preferred inflation measure and thus receives greater attention. Okay, so although we do say, right, CPI is big, this is actually big as well, right? This PCE. So if you never paid much attention to it, definitely pay attention to it in the future, right? Okay, so let's see what's coming up this week. Right. Oh, and also let's not forget that the GDP for the US actually came in really good. That's a very strong indicator as well. Shows that the US economy is actually starting to do well. But this week is actually a very interesting week because we do have the interest rate on the Australian coming up, GDP on the GBP coming up as well. So that's big. Keep an eye on that. We do have some sort of initial non-farm payroll figures. In fact, non-farm payroll is this week as well. Yeah, Friday. Friday is the 3rd of October. So we do have the non-farm payroll this week. So, interesting week coming up ahead of us. The pound, the Australian, the US, those are the main. I mean, it's CPI as well for the euro. So potentials on all of those currency pairs come, or those currencies, let me put it that way, those currencies, not currency pairs, those currencies this week, right? So for the moment, as we were saying, we're seeing a very strong US dollar. For the moment, we saw a weak pound for the moment. We'll see whether that actually changes on Tuesday. So, yeah, when it comes to figures from, if we're going to do anything tomorrow, we're saying, all right, well, our US is still pretty strong, or pound is still pretty weak. GBP, USD right here, or bias, but at least, right? The bias is still pretty much downside for the moment. Just remove these. Okay. You know, potentially, let me just switch this off. Okay. Right, we do have a gap in here, so we can just mark that area off. So potentially a little bit of a pullback into this zone, and we wait to see what happens with the GDP news. And I'm definitely looking for a pullback into this area. Okay. On the GBP USD. Now we do have, this is from a technical standpoint now, right? We do have a gap here that could potentially be filled in. Okay, right? So price could actually still push up in this area, in this zone a little bit before it pulls back. So that's something to keep in mind as well from a technical standpoint, but we still pretty biased for the pound to drop off a little bit here. One thing you could do as well is just put your your bears on this pair and wait. Let it hit your zone.
Coach,
And
I got a
then,
question.
yep, no problem. Go ahead. Sean, right? Go ahead. You're muted, so you unmute yourself.
Sorry.
Yeah.
You said that there is a gap. Could you explain what I saw you put a marker there for the gap.
Okay, right.
How do you determine that that's a gap?
Sure. Good question. Now, when price moves, okay, let me show you price movement from, let's say here, right? So if price is moving and then see price drops down there, but then this comes back up and then price drops down and then this comes back up and all that as well. It's like each candle. See, this candle pushes down and then this candle comes back up into this body of this candle. But then eventually it just has a big drop off and there's no pullback into this candle.
Okay.
See what I mean? There's no pullback into that candle. So that there is it creates a gap. See, from the bottom of this candle to the top of this candle right here, there's a gap there, right?
Okay.
Where there's no pullback into this candle.
Okay.
So that's what I mean by gap. So whenever the tool we put on fair value gap, that's what it is. That's the manual way of doing it.
Okay.
Got it?
Understood.
Yeah.
Thank you.
No problem. So like even here when the pound actually pulled back into this gap right here, look, you see the gap is from the bottom of this candle to the top of this candle right here, and look at price pull back into that zone there. See it? And consolidate there a little bit before it dropped off. You see, that was last week. See it?
Yeah, I'm seeing it. Yeah.
Yeah, yeah. So sort of similar situation.
Okay.
Yep. Now it doesn't always pull back, as you could see from here. There is a gap here, but it doesn't always pull back. But oftentimes it does. Now, yeah. So we're gonna be bearish on the GBP USD. Again, we could set some alerts in here. Right? We could set some alerts. I'm sure as well. Say, for example, if we put on our boxes, for example, well, see what I mean? You see it marked off the fair value gap here? See it? So we did it manually, but then the tool itself, if you put it on, you see it marked it off there for us. See it?
Yep.
Yeah. So it marked it off there for us. Once we put on fair value gap, there is a setting in here that we could just go on here and just switch it on. So this one here, fair value gap. If I switch it off, then you see it disappears, right? If I switch it back on, then it comes. See it? Yeah. So that's just a zone that price could tap back into before it drops off. Okay. This is also a internal order block here. So either here or there, price could push back up in there. And especially for the GBP USD. So this is one of the things that we have to be sensitive of is the pound will generally move a lot in the
New York session.
European session, but also in the New York session because of the US dollar. So in either sessions, it could make some serious moves, right? in either session, in either the New York session or either the European session as well. So we got to be aware of that. So I would say if it pushes up here in the European session, then in the New York session, we're looking for a pullback. Yeah. All right. So let's look at just like say AUD USD, for example, because as I said, those pairs should have dropped off. Yeah, and it did drop off as well. Now we were looking for a sell on this AUD USD, but then it had a little bit of a push up. But you could see here, once we put on our internal order blocks as well, you could see that price actually respect that internal order block before it dropped off. Then if we missed that, it actually respected our mood swing level here on Thursday before it dropped off here on Friday. So it's good to actually have those on, so it gives you, other areas, other zones that we could take some trades from. So similar situation here as well. You could see that we have a fair value gap that is marked off right here. So again, I'm looking to see whether price pushes up here on tomorrow and look for a little bit of pullback. But remember that we do have the Australian interest rate coming on Tuesday. So that could shake things up a little bit. Now, the interest rates should be kept steady because we did have a drop in interest rates. Usually when interest rates drop, it weakens the currency a little bit. In fact, that's actually what's happened since the interest rates had started to take a turn. We saw that the Australian started to drop off somewhat. Excuse me. All right. So let's look at gold for a minute. And we'll wrap it up on gold. Now, gold, let's see here. My bad. There we go. And I want to do this one, just in case. Right. So gold is in an interesting position. Yeah. Mr. Gold here had a strong move to the upside. I'm gonna switch off these boxes so you can see. Right. So after that news on Thursday, big drop. But then it came all the way back to our mood swing level. Then it dropped off back to our fair price level. Then it pushed up. Then it tapped our mood swing level here. And it continued pushing up. We did have a lot of consolidation on Friday morning during the Asian session, but then eventually it took off after we had this. Oh, I've switched that, but there was that PCE, that news that came in from the US. Seen a little bit of a pullback here, but the reality on gold for me is that gold should continue starting to push to the upside. I'm going to put back on the boxes here. I'm going to put on my bulls here for gold, right? And we're going to see. Now, I know we're waiting for the version 3 to come. Next week, Sunday, right? Next week, Sunday, we're going to pre-launch version 3. But let me give you a little bit of a sneak peek into certain things that you might be able to some additions on version 3 that we could help. So this is version 3 here. Okay. Let me switch to a different chart. I see market, for example. Okay. All right, so there we go. So in version 3, we would have had this trade set up here, way across here, where it gives you the sweet spot, your stop loss, take profit targets. Sorry. For that push to the upside. But there's other things here that we could have used in version 3. Like, say for example, you could put your bears on, your bulls on for your push to the upside. And we could say we want to have our mood swing line dynamic. This is our mood swing dynamic line to show. We just put that on, right? We just go back to style here. Right, give it a moment. So when we have that on, we could switch that on and off. You see a dynamic line, mood swing, dynamic line. You see that orange line right there? Mood swing, dynamic line. So what that does, it helps with when we're using these bulls and bears, for example, right? When price breaks, like we get that bulls and it breaks above this dynamic line right here, that gives us some more confidence to get in on the buys. Like say, for example, we have some bulls right here, but it's below the dynamic line, then that filters out that trade, right? There's no way that you're going to get into that trade with bulls below that line. But when we start seeing bulls break above the line and price starts continue pushing above the line, then that gives you more confidence to get in. Right here as well, bulls break above, next candle, still bullish, we get in on the trade. Right here as well, we see the bulls, right? See a little bit of a pullback and then a continuation to the upside. So that gives you that confidence to get in on that trade to the upside. Now, one thing that you would learn and observe is we have pretty much two mood swing lines. We've got the dynamic mood swing line, and then we've got the static mood swing line, right? Where that just remains at the same price throughout the day, while the dynamic line would move as there's three things really: volume, momentum, sentiment, moves, right? The dynamic line will move along with that. But the static line at the end of the day, right, will just be somewhere around here, right? So we haven't, it's not plotted yet, but right around here is where we would see our mood swing static line come into play, right? And with a potential of price just come into that area and then giving us a push to the upside. We do have a fair value gap in here somewhere. If we step back out a little bit, do I have it on? I'm not quite sure I have it on this one. Fair value gap on. Oh, I don't think I have the, oh yeah, I've got the boxes on. Okay, yeah, it's fine. Oh yeah, there we go. Right, so we do have a fair value gap in here. So we'll see whether price comes back and just taps here and takes off, or gives us a deeper retracement into this area. So those are some of the things that the mood swing version 3 is going to give us. And then this trade setup, it will shift to the new mood swing level as it comes available to us, right? So we're gonna release this, and you're gonna have this next week Sunday, right? So stay tuned for that, right? So for the moment, we keep our eyes on the Australian interest rates, GDP for the pound, and CPI for the euro. Those are the main ones for this. I mean, have quite a lot. But the big one, of course, is the non-farm payroll unemployment rate in the US on Friday, right? All right, so we shall see each other on the inside and we'll stay connected. Bye-bye for now. And we'll post this in the chat as it becomes available. Bye-bye for now.
Thanks, Barry.
Bye.